Okay, let's take a look at the pound dollar pair and see if we can't predict what's going to happen next week. Now, ever since Brexit, we've been in a consolidation zone here between 1.34 and 1.29. Let's see, into June here, you basically saw David Cameron resigning, a bunch of volatility. Theresa May comes in right about here. And then, let's see, last July, around the 23rd, you had the PMI flash sucked, so that sent the pound down and touched the support here. Consolidation. You had GDP numbers, not too bad. Boosted the pound up a little bit. And then this kind of area, no real reason for the pound to start climbing except for maybe a little bit of weakness in the U.S. housing market. But I think what was going on here was just the market placing bets against the Bank of England not cutting rates. And you can see here when they actually did cut those rates that everybody got kicked in the ass. And the pound had a lot of downward pressure ever since then, basically, until you came to the old million-year lows right here. And we had a little bit of good UK inflation news here. Caused up a little bit of a spike. And then a couple days ago, you also had the claimant count change, came in way under forecast. So that was basically this little push up here. And then retail sales came in pretty good, and that was this huge spike here. But you can see that these rallies upwards have basically been getting faded by people short selling, because ever since the August rate decision, again, this sentiment has been downward pressure on the pound. It's only really when you get positive news and bouncing off of this very big trend line here that you see the pound go back up. So for next week, very light news calendar. The only thing I think is really on Friday when GDP estimates are revised, and there's some U.S. interest rate talk by Yellen. So really, there's not that much news next week. Now, in the absence of news, I think you'll probably see downward consolidation like you saw here. And once we reach this line again, that's where you need to be cautious, because you don't know what's going to happen. Of course, it might just bounce off the support down there and spike back up even in the absence of news. But there's always the chance that you can break that line, especially if timed with some bad news for the UK, push down below it, and then we start to slide down pretty far. How far, nobody really knows. So that'll be a new thing to watch. We'll obviously enter a new area of consolidation or whatever. But, I would say just short spikes up and try to take that profit before we get down here, because this is an area where you're not too sure what's going to happen, and you just have to be cautious and wait to see if the trend's going to reverse up again, or if people are ready to take this thing down. Now, whether or not you actually think the UK will go into recession, and I think it's still up in the air really at this point, especially with the low pound. It's going to cause some inflation in the UK economy. It probably raise up the exports. The point is, we really don't know right now, and everybody's kind of waiting for more economic data to come in. But the market sentiment, the emotion of the market right now, ever since the August rate cut, is definitely negative on the pound. So I would just follow that market sentiment, barring any kind of amazing news. But even good news out of the UK, people are just going to say, well, it's still too early to tell. what's going on. And moving forward, you have a chance that the Bank of England will lower the interest rates again, close to zero. And you also have U.S. dollar interest rate hike looming, but that's always looming, isn't it? I mean, they never really seem to want to pull the trigger on that, so you take that with a grain of salt. Yeah, just watch UK US economic data that comes out, and we'll see where we go from here. But I think, definitely you can see lower and lower highs being reached here. Possibly we won't even go above 1.32 again for some time, but we'll see.